All right, in this lesson, we are going to show you how to reconcile the bank reconciliation. And I know you're going, what? But basically, once we do the bank reconciliation, we actually have to reconcile all the changes to our balances that we didn't know about into our book. So we need to reconcile the bank reconciliation into our books, aka we need to adjust our books for any transactions that we didn't know about until we did the bank reconciliation. When we do that using journal entries. So in order to make the change in our books, we don't just change the numbers, we actually have to make a corresponding journal entry for every change we need to make. So that's what we're going to do in this lesson, and I'm going to go through the journal entries for the changes that we're going to need to make based on the bank reconciliation that we did in the last lesson. So you may want to take a look at that lesson if you didn't, to make sure that you know what we're doing here. So let's get started with reconciling the bank reconciliation. Now, once the bank reconciliation has been completed, the adjustments made on the reconciliation for the company's books need to be entered into the accounting system as a journal entry. Now, the key to the journal entry is to understand how the adjustment affects the company's cash balance. So as we look at all of these adjustments that we need to make, we have to understand the context of the issue and how we take that issue and turn it into a journal entry that fixes that issue on our book. So that's what we need to do. Understand the context of the journal entry that we're going to need to make. Adding will debit the cash, subtracting will credit the cash. So that's the basic. If we know what we're going to do with cash, we're halfway done with our journal entry. The other half is what we're going to have to figure out. So if we're going to add cash to our balance, we know we need to debit cash. If we are going to reduce the cash amount, we are going to credit the account. All what's left is whatever we didn't do. So if we didn't put a debit, then we need to figure out the debit. If we didn't put a credit, we need to figure out the credit. Okay, so let's take a look at our bank reconciliation that we did in the last lesson. So this is what it looks like. And when we look at this bank reconciliation, the question is what adjustments do we need to make? Well, the bank will adjust their own adjustments. So on the left-hand side, we have all of these adjustments that the bank needs to make adjustments on. Well, we're not the bank, so we're not going to do those adjustments. So we're going to leave that to the bank. Now, we don't need to call them and say, hey, you're missing like $200 or you reported $6,200 in deposits and we really only deposited $6,000. We don't need to do that. The bank will figure it out. They've got good technology in place to deal with that. What we are concerned with reconciling the bank reconciliation is our balance, okay? So all of the adjustments that we made in the bank reconciliation is what we're going to have to do journal entries for. So on the right-hand side, you see that we have interest earned, you have a non-sufficient fund check, you have a check error, and those are the adjustments that we need to make. So we're going to take you step by step on making those adjustments. So let's start with journal entry 1. And I know I don't show you here what journal entry 1 is, but we're going to do it from top to bottom. So we're going to start with the first one here. So we look at the first adjustment. The first adjustment is interest earned. So the first question is cash going to go up or down based on this entry? Well, if we've earned interest, that means we have more cash. So if we're increasing cash, we are going to debit cash. So we've already got step number 1 done. We're going to debit cash for $15. Then the question is what is the credit? So how did we earn this $15? Well, we earned it through interest revenue, right? So we're not going to put sales revenue, but we are going to credit interest revenue. So this is a new revenue account that we haven't really talked about, but it is revenue. Like we've received something. We did something. What did we do? We put cash in the bank account and it earned money, so it's interest revenue. So we're going to credit interest revenue because it is a revenue account. Increases in revenue are credit. And what type of revenue? It's an interest revenue. So when we make this entry into our books, then our books are now $15 more, which is what our bank statement had at the beginning of the day. All right, moving on to journal entry 2. With journal entry 2, we're going to go to the non-sufficient funds check. So this is where context, I think, is important. Well, first of all, what happens here? Well, in this non-sufficient fund checks, it looks like we reduce the cash balance. So we're going to debit or credit cash. Well, in decreases in cash, which is an asset, is a credit. So we're going to credit cash for $450 because we're reducing cash. The question is, what's the debit going to be? Well, from the context here, we got to figure out, why did we have to reduce our cash for $450? Well, the story goes is that we had a non-sufficient funds check. So a customer paid us, we received the check. We took the check to our bank. The bank tried to cash it with the check writer's bank. The check writer's bank said, there is no money in this account. We can't pay you this $450. So they returned the check to our bank, and our bank is telling us, you don't have the $450. Now, if you remember originally, what did the bank do when they received our deposit? They added it to our bank account. So they added it to our bank account, so that increased the bank account. Now we're going to decrease it because the money is no longer there. But what caused that deposit? Well, what caused that deposit was the original payment from the customer. And so when the customer paid us, we debited cash and credited accounts receivable. Well, their check bounced, which means they still owe us $450. So we are going to have to increase our receivables because we are still owed $450 from our customer. So we're going to reinstate the liability that that customer has with us. So we are going to debit accounts receivable. For $450. Okay, so accounts receivable for $450. That is the amount that they still owe us, and now we are just restating that into our books so that we have it on our books showing that this customer still owes us $450 by debiting accounts receivable and then reducing cash by a credit of $450. All right, moving on to journal entry number 3. We're going to go to the last one here. We have a check error. Check 800 error, and this error shows that we wrote a check for $800, but it cleared the bank for $1,000. So we probably wrote it for $1,100, but in reality, we only put it in our book as $800 for whatever reason. So we need to reduce our cash balance, and we know that we're going to reduce our cash balance by doing what? We are going to credit cash $800, so that reduces it. Now our job is to figure out the debit. So what made this cash payment, I guess you could say? Well, sorry, I put $800. It should be $300. I was thinking about the original balance. Okay, so $300 there. What made the original payment? Well, the original payment was we paid a supplier. And so if we paid a supplier, when we paid the supplier, we debited accounts payable and we credited cash, right? Cash for $800. Well, it should have been cash for $1,100, not $800. Therefore, our accounts payable it was debited for $800 instead of $1,100. So we want our payables to go down even more because we actually paid more than what we said we paid on our books. So in this case, we are going to debit accounts payable for $300. Why? We're reducing our payable for an additional $300 because we don't owe that any longer because we did pay the $300 extra when we wrote that check for $1,100 instead of $800. And since it cleared the bank for $1,100 and that's the proper amount, we need to decrease our payable because we don't owe that extra $300 because we paid it with that check. So we're going to debit accounts payable. So that is a look at how do we reconcile the bank reconciliation. And again, it's important to know that to do this, you have to think about the context of why we have to make the adjustment. The first thing that you should do is figure out what cash is doing. If you can figure out what cash is doing, you're halfway there. The other half has to do with what the context of the question is. If it's because of a non-sufficient funds check, we have to restate the receivable. If we made an error in the payment, then we have to decrease the accounts payable, or maybe even increase the accounts payable if we flipped it the other way around. Interest revenue is usually the one that we have to adjust for because we didn't know about it. So we're going to have to increase cash and then increase the interest revenue account. Now, the one thing that we didn't talk about here in this example is bank fees. Bank fees is an expense. So if we had a bank fee, the bank would know about it. We wouldn't. We would put that adjustment on our books, on our column for the bank reconciliation. And then when we do the journal entry, we're going to have to debit the bank fees and then reduce the cash by crediting the cash. So that's what that would look like from there. So hope you enjoyed this example walkthrough as well as the understanding of how we reconcile the bank reconciliation. And we'll see you in the next lesson. Hey guys, it is Patrick. Don't forget to press the like button and share this video with someone who could get a lot of use from watching this lesson, like maybe a classmate or maybe a friend or maybe just a parent, just because you wanted to share this video because you're very excited about what you saw. Share it with someone. And if you want to help us grow and help us make sure that we put the very best in accounting topics out on YouTube, make sure you press the subscribe button and turn on that notification bell. That way you're alerted every time we post videos to this channel. Now, I do this with every one of my classes at the end of class. What did you learn from this lesson? Put that in the comment section below and I'll respond to you on what you got out of this video. So hope you enjoyed this video and we will see you in the next lesson.